So in this unit, what we're going to do is we are going to start off with the first mandatory unit. What I'm going to do is, before I start this session today, I'm going to show you just quickly going through one of the pages to go to a summary page.
Yeah.
So this is the summary page, which gives us a clear idea of the units or modules that you will need to study in the level 5 extended diploma in management. So here in this particular module, if I just magnify this now, so you're able to see it clearly. In this particular, course, we are looking at studying, 8 units in total. And when I look at the 8 units that we are going to study, we are going to study these 4 units, which are going to be, mandatory. These are mandatory units. And today we are going to start off with the first unit, which is, business organizations in global context. So in this unit, if I just quickly go into, the specifications. So today we are looking at, in this unit, covering learning outcome 1, which talks about understanding differences in global business operation. And there are 3 tasks that we have to cover. One of them talks about, different types of organizations and different companies within the global sector, in a global business environment. We'll talk about the responsibilities and then look at what kind of strategies, which could be sales strategy, marketing strategy, HR strategy, what kind of a strategy does the company apply when they work within a global business environment. So I have got, a presentation that I'm going to go through with you. It has got a couple of slides, and we will cover this particular unit, this particular learning outcome, which is learning outcome 1, this bit that we are looking at covering today. And this is what is going to be our discussion in terms of, the few slides which I've got. Now, let's look at a brief recap. What we started yesterday in the level 4, which was business environment. The topic is quite similar. As you can see, there is something called business. Could you recollect, or could you recall what we discussed? What is a business yesterday?
Yesterday.
Yeah. We looked at the definition of business yesterday. Do you recall what is a business?
Is business. Sorry, can you tell me one more time?
Right. Okay. So in the yesterday's session, when we discussed about business environment, we looked at 2-3 definitions. Of one, we looked at the definition of what is a business. Then we discussed what is a market, and then we progressed on to understanding what is a business environment. So could you recall what we discussed yesterday in terms of when I use the word business? What does business mean? What do you understand by business?
Inflation, and then inflation is related with business.
Correct. So when we look at business as a term, as a word, when we look at this as a word, what we see is that business could be, if I just quickly write, a business could be, a organization. Business is a company or an organization. Now they are, so they are in the market to sell or offer products and services. Correct? That's what we discussed. Right. We took an example of yesterday, which is called McDonald's.
McDonald's.
Yeah. So McDonald's, and we said that McDonald's sells food, which is something called fast food, and we discussed something called hamburger. Yeah. So when we look at business, what we understand is that business is nothing but an entity, or an organization which is in the market
Market.
to sell goods, services, and make profits.
Yep.
Right?
Right.
Yeah. Now,
Yep.
when we look at businesses like McDonald's, McDonald's is a global business because
Global
it
business.
is a US company, but it has operations in over 120 countries. So would you agree that it is a global business?
Yeah. Global
Yeah?
business. Yep.
Yeah, correct. Why do we say it is global? Because it has operations in many countries, right?
Right.
It has, operations in many countries. It has outlets or, customers in various cities or countries, and that is why we say the business is a global business. Now, we also took an example of Samsung. Now, what type of company is Samsung? Is Samsung a national company? Is it a transnational? Is it a global business? What is it?
Global business.
Very good. So Samsung also is a global business. It is not a local company or a national company, but a global company. When I say national company, national means it is a national company in Korea, right? When I say local company, it is a local company in, say, one of the districts, which I would say where Samsung is headquartered, which could be, say, one of the cities or where are the districts, in Korea, in Seoul. It is a national as well as a local company. So today's, understanding that we need to do is to understand what creates a business which becomes global, and why do we say a business is global? Why do they have operation in so many countries? We look at understanding that. So today we want to understand differences between global business operation. So let's begin. Now, in this unit, what you're going to look at is that you're going to get knowledge about how a business operates in different countries and what are the key, characteristics which the business has when it tries to work across many countries or many different cities. So let's look at the first one. Now, if you see the screen, what do you see? There are 4 different companies, right?
Right.
So we have Walkers. What is Walkers? Do you know what is Walkers?
No, I don't know.
Okay. So if I look at Walkers, Walkers is, a very popular brand, right? And this particular crisp brand is owned by, a company called, I think, in most cases, this is a very famous, crisp brand. That means chips. When you have it with burgers or, when you have it as snacks. Now, this is a very famous brand. It sells, worldwide, or it has, operation. This is available in so many different countries. It has different flavors. So this, according to you, what I want to do is understand what are these businesses. So Walkers is a global business brand. Correct?
I think this is local, no? This is global business.
Yes. So Walkers is a global business brand. Walkers is owned by a British, company, and basically it's a British brand, but it sells, its products in different European countries. So this is a potato chip, company which makes crisps or wafers. Okay.
Okay.
So Walkers is a global brand, correct? Global operations. What is Comic Relief? Do you know what is Comic Relief?
Sorry, one more time.
Do you know what is Comic Relief?
No, I heard first time.
Okay, Comic Relief is a very big charity in the UK. Okay, this is a charity which basically, raises money for, different I would say, charitable causes like poverty alleviation, removing poverty in the world, providing clean drinking water, providing education. So when you look at Comic Relief is a charity based in the UK. They are not a global brand, right? So Walkers is a global brand. It has operations in so many countries. Comic Relief is a charity which is based in the UK. What about the Manchester College? Have you heard about Manchester College?
Manchester is England.
Yes.
UK.
So correct. So this is a college which is based in Manchester, and it has lots of campuses in Manchester. Now this is a local business. It is not a national business because it is only present in Manchester.
Manchester.
Okay? Yeah.
Okay.
Now when we look at McDonald's, McDonald's is a global.
Yeah, I know. Yeah, global
business. Correct.
Yeah.
So when we looked at the definition of business yesterday, we were saying that an organization or an entity which provides people with goods and services is what is called a business. Now, we are going to look at different types of business because when we look at business in its classification, we talk about businesses as different types. They could be public sector business or a private sector business. And when you look at public sector and private sector, there are different types of classification possible in businesses. So let's briefly look at some of the classification. Now, why do you think you would start a business? If I have to ask you a question, you want to start a business. Why do you want to start a business? So what will your answer be? What do you think you will answer when you say, if you run a business or if you want to start a business? Why do you want to start a business?
I know about provide something and then but I don't know business exactly. So
correct. So when you want to sell some products or services or goods or services in the market, you're going to register a company, and that company is going to be a private limited company or a sole trader or a type of a company which will allow you to sell and trade in the market. Now, why would you set up a business? Because you're looking at making money, isn't it? You're not looking at making no money, isn't it? You're not doing it for charity. You want to make money, isn't it? So when you look at setting up a business, your main objective is, when you look at why businesses are formed, their objectives are very clear that they want to look at making profit. Some businesses, when you start a company or a business, their objective could be they want to survive. That means they're having a hard time. The sales are falling. Like in some countries, sales for McDonald's are falling. So they are trying to survive by, innovating their food menu, coming out with new types of products, which are new offerings. Like McDonald's in the last few years, if you've seen, has introduced something called, coffee. They've introduced a breakfast menu in the morning. They didn't have a breakfast menu, but maybe 5-7 years back, they introduced the breakfast menu. They have a lunch menu now. They also introduced ice creams and a couple of other things. And the reason why they did that is that they felt that their sales are declining in certain countries because McDonald's food is considered fatty food, or it is considered unhealthy food. So what McDonald's has done, in order to survive in the market, they have done innovation by taking out new products or new types of food products in the menu. Right? Now, when you start a new business, you don't make profit on day one. So in this case, when you do not make a profit, what you're trying to do is you're trying to break even. That means at some stage, what you want to do is, when you're running a business for 1 week, one day, 1 week, 1 month, 1 year, your main aim or objective is to make some sort of break even. That means the money coming in is equal to money going out. You're at least not making a loss. So sometimes when you see businesses are new and they are starting off in the market, they are basically looking at breaking even first. Now, some businesses are looking at growth. When you see Samsung or LG, they open office or a branch in a new country. Why do you think they want to open and sell their product in new country or new places? Is because
they want to grow.
Correct. They want to grow. They want to sell their products like mobile phones, washing machines, microwaves, TVs in new countries, and they want to get more customers, and thereby they are looking at growing.
Yeah.
Now, what about providing, quality? So sometimes you will see when you look at service companies, companies which basically provide service. Like what kind of service? It could be an accountancy service. When you look at Accenture, so your accountancy service or your accountant, if he doesn't file your accounts at the right time, you could be fined by the government. So in this case, when you look at services business, a call center, sometimes when you have a problem with the product, you call the call center or the helpline, and they try and resolve your problem. So if they do not provide a quality of service, they could lose customer. Okay. So when we look at business has different types of objectives, and when we look at business, they can be local, national, or global. Is that okay?
Okay.
Now let's look at another classification of business, which is what are the two classifications of business? One is what we call private sector business, and the other is called public sector business. So we discussed yesterday when we talked about public sector and private sector business, is that public sector business is where the business is owned by and controlled by, financed by the government, right? And when we look at a private sector business, this business is not controlled by or financed by the government. So we looked at an example of National Health Service yesterday, and when we looked at National Health Service, we look at police, we look at schools, universities. These businesses are funded by the government. They are not, funded by the private sector, and that is why they are called public sector businesses. But in other countries, you could also find railways. You could find airlines, for example. Major road infrastructure, bridges. Those could be owned by the government and operated by the government, but has no funding or finance from private sector. But on the other hand, you could look at different types of private businesses which are owned, financed, and controlled by either large companies, venture capitalists, financial institutions, and they tend to, control their activity in terms of selling products, services, goods, and also making profits. So two types of broad classification when we look at of businesses is private sector and public sector, correct? Sector. Now, two other concepts. There is something called limited liability and there is something called unlimited liability. What is limited liability? Limited liability means when you have a company, when it says private limited company, and then you say LLC. I don't know if you've heard of these terms. You say private limited LTD, or you say limited liability company. So limited liability company, right? There are two different types of companies: private limited company and public, which have limited liability company. Now, what is the differentiation between the two? So when I say limited liability, what is liability? Can you think of what is liability?
Liability.
So liability is when you are liable to give some money. You're bound to basically look at giving something in return. So you are basically responsible for something, and that could be either money, resources, and that is where liability comes in. Now, if you run a business and you run into trouble, that means you are losing money, your business is making loss. So in those cases, if the business has unlimited liability, that means if you are the director of the organization, then in that case, the creditors or the people who are needing to receive money from you can actually come and also take away your personal things. That means if the business goes into a loss, then the director has to put his own personal savings, other things into also the business, and they become liable. That means even those can be taken away. But in the case of limited liability, if the business is in trouble, the shareholder or the director who owns the shares in the company will only lose the money that he's invested in the business rather than his personal property.
Oh.
Right? So unlimited liability means if the business is in trouble and you're going to become bankrupt, then the business can actually repossess any of your personal assets. When I say personal asset, means assets of the director or the shareholders. And in that case, that means you are a private limited company with unlimited liability. Okay? And where your liability or your personal possessions / assets cannot, when I say assets, your, things like if you have a costly watch, you have a costly car, for example, these cannot be, possessed by creditors. Then in that case, that is called a limited liability. Okay? Understood? Okay. Great. Let's go to the next one. Now, when we look at different types of businesses, we want to also understand different types of businesses which are possible in the private sector. So first thing that we will look at is a sole trader. Do you know what is a sole trader?
I don't know.
Right. When I say sole means, what is the meaning of the word sole? Sole means single, one. So in this case, one person, single. In this case, one person owns the business. And whatever money you make, whatever loss you make, you are the beneficiary of that loss or profit. So in this case, when you register a business and you work as a sole trader, that means only one person owns the business. And in this case, you might be the employee, also the director of the business. And in this case, these businesses are usually small businesses like a corner shop, like a newsagent shop, or, a small shop. And here you have unlimited liability. Whatever profit you make, whatever loss you make, is the liability of the director or the person who owns the business.
So this is individual shop.
Individual shop, yes. And these could be things like news agents, corner shops, hairdressers. When you go to a hairdressing salon, you look at plumbers, electricians, or even small restaurants which have the owner of the restaurant or owner of the business also as the employee, and they are something called small businesses, and that's why they're called sole traders. Okay. Now the next type of company that we look at is called partnership. So when we look at partnership means more than two people own the business. That means it could be Minjay and Raman as the partner in the business. If we work together, we are partners in the business. We both have 50% shares. We both put the equal amount of money. Any profit that we make, we split the profit 50-50. So partnership can be in more than two cases. That means you can have more than two partners in the business. When you look at accounting firms, when you look at solicitors, when you look at some of the service organizations, here what you generally see is that there are what are called partnerships. So here usually the businesses are small, they have unlimited liability, but when you have partnership, there is a bit of understanding that you have, which is called the memorandum of articles or understanding. Memorandum of understanding, MOU. MOU. What is MOU? This is a document which defines what is the key points of our partnership. What are we agreeing in terms of partnership? I'm not agreeing to share my car, or am I not agreeing to share my money in the bank, but we will put some things down which will basically tell us that when we become partners in the business, we own the business 50% or whatever percentage you decide. So when you decide on certain things, like for example, Minjay and Raman are going to be partners. Okay? Example. Okay. Now I say when we look at shares, shares, I would say shares in business. Shares in business. So I would say, okay, Minjay owns 40 shares or 40%, and Raman owns 60%, right? Then we look at profit sharing. So at the end of the month, and in end of the month, if the business makes profit, what we do is we decide the percentage of split. You know, that Minjay and Raman will both get 50% share of profit, right? We could, so these are what are called terms and conditions, and these are written down in something called memorandum of understanding or deeds of partnership. So in this case, what you create is a document which has all these terms and conditions defined, and this is called the deeds of partnership. And what you also do is you define responsibility, right? Responsibility will be Minjay is responsible for sales, he is responsible for, say, rent, he is responsible for stocks and ordering, and then you decide responsibility. Raman is responsible for marketing, he is responsible for employee wages, and also dealing with customers. So you divide responsibility. Okay.
Yep.
Now, when we look at next, we look at something called private limited company. So here, what we see is when you look at private limited company, here the business is owned by shareholders. That means it could be the director, there could be one director, two directors, there could be non-executive director. But here the businesses are generally small, but they could be small or medium-sized companies, and here the business can be run by families or friends. But the members or the shareholders in the business are different from maybe in some cases the directors of the business. And here the person has limited liability. So if the business is to make a loss or the company is to close, the personal assets of the directors or people who have invested in the company cannot be possessed by the creditors. And here, shares cannot be bought and sold on the stock exchange. So what is the main difference between a private limited company and a PLC? So if I look at private limited company and I look at public limited or public liability corporation or PLC, what is the difference?
PLC.
The difference is this has shares but not listed on stock exchange. Okay?
Okay.
And in the case, so here basically the shares are owned by the family or the person who started the business. Okay? Now in this case, the shares are owned by public, members of public, right? And the company is listed on stock exchange, like the Kospi. In Korea, you look at FTSE in the UK. So here, basically the company like Samsung is a public trading company because its shares are listed in America, in Germany, in US, in UK, in Japan, in Singapore, and in Korea. So, but when you look at a small corner shop or a small business, their shares are not listed in the stock exchange. So public limited companies are companies wherein you have shares which are owned by the members of the public, right? So some of the big companies that you see which have, which are called PLCs are British Petroleum, you have Tesco, ASDA, British Airways, Samsung, LG, HSBC Bank. When you look at, these are all companies which have shareholdings in the members of public. That means the company directors own some shares, but most of the shares of the company in this case are owned by members of public, and they are also listed on the stock exchange. That means you can do buying and selling of their shares in the stock market. So let me ask you a question. What type of company is Apple? Apple is what type of company?
What type of company? PLC.
Very good. So Apple is a PLC because it is listed on the stock exchange. its shares can be bought and sold by the members of public, and it is a large organization which has operations in so many countries. Correct?
Right.
Now, another question. So Korean Air. What is Korean Air? Is it a public limited company or a private limited company?
Public company.
Public limited company. Correct. So it has operations in so many countries, big turnover, shares are sold in the market, and that is why it is a PLC. So have you understood the first task wherein we want to understand, different types of organizations and how they operate in different sectors? Okay. Now, the second one, what we want to do is understand what responsibilities the companies have when they operate in a global business environment. Okay. So here we are looking at the role of stakeholders. We discussed stakeholders yesterday. What are stakeholders?
Stakeholders is stakeholder.
So when we discuss stakeholders, stakeholder is not steak is not beef. Okay, it's not beef. So when we say stakeholders are people who have vested interest in the company. Correct? They have some sort of an interest in the company or the business. So they are called stakeholders. People who usually invest in the business, could be an investor and they are a stakeholder. People who work within a company as employees could be a stakeholder. People who are directors in a company can be a stakeholder because they are responsible for management decision making. You look at bank, that could be a stakeholder because bank provides you what is called overdraft facility or some sort of a cash flow money to be able to run daily operations of your business. And when you look at external suppliers, partners, government, they can also be different types of stakeholders for a business. So why is government a stakeholder? Can you think of a reason why is government a stakeholder?
They take care of our money. Not our money, just money. They take care of money and shareholder and stakeholder is different.
Is different. So one of the stakeholder can be shareholders. That means people who own shares in the company are also stakeholders of that company. Government can be a stakeholder because government introduces law, legislation, and taxation, which the company has to pay tax. So if you don't pay tax, government can come and shut your operations down. So government introduces policies, economic policies. So these policies basically allow businesses to operate favorably. So government is an external stakeholder in the business because if you do not have conducive or means favorable business policies, then what will happen is that at some stage you will see that the business is going to be affected because the government has increased, say, taxes or duties on certain products that you trade in, and that is affecting your decision making and also the business. So when we look at responsibilities of business organization, what we are going to talk about is the role of stakeholders in the business. People who have interest in the company or the business operations, they are affected by the success of the company. If the company is doing well, they are making lots of sales. That means the company is making a lot of profit. If you are a shareholder, what do you get at the end of the year? If you own shares of the company, what do you get once a year? If Samsung makes a lot of profit and you have what you call shares of Samsung, so at the end of the year, what do you get on the shares?
Their products. And
no, what you get is dividend, right?
Dividend.
So if you own shares of a company as a shareholder and the company is making lots of sales and they are making a profit annually, then what the companies do is they give their shareholders some sort of dividend, some sort of interest is paid on the shares because you have contributed by buying the shares of the company, and that company, if it makes profit, it rewards you by paying, what is called dividend to its shareholders. Have you heard of this? Yeah?
Yeah, okay.
Okay. Now, when we look at responsibility of the organization, what kind of responsibility does the business have? Now, when you look at stakeholders, the company has some responsibility towards its stakeholders. That is employees, its suppliers, and its customers. Because if you're selling goods and services and employees are working to produce those, let's look at a car company. Let's look at, Hyundai. So Hyundai in Korea, has lots of people who work within the factory. Now, if they work for every month, at the end of the month, what do the employees expect?
Salary.
Salary. Very good. Salary. Yes. So they have to pay bills. You have to pay bills. So if you work for the month and at the end of the month you expect the company will pay salary. Now, similarly, when the company has to buy goods from partners or suppliers, so the suppliers will supply maybe like Hyundai, they will supply tires, engine, body parts, everything. But they expect that after the credit 30-day invoicing period is over, or maybe they have some credit 30 days, 15 days, 1 week. After that, they expect the invoices to be settled. They receive money for the goods which they have supplied to the company, isn't it? And similarly, when you have customers, when you buy, Santa Fe, you buy a 4x4 from Hyundai, very popular SUV, Santa Fe. So when you buy Santa Fe, you spend so much money and you expect the vehicle or the car to run very nice, smooth, very good drive. But if you find that within the warranty period of 3 years, the car is giving you problems, then as a customer, you feel that you have not got the service which the company needs to provide, or the product is not of acceptable quality. So as a customer of the company, when you pay the money and you buy the car, you expect the company to provide a quality product, isn't it? So when we look at stakeholders, when we look at the responsibility of the company, which has these stakeholders, what we want to be able to see is that all businesses have certain responsibility towards employees, suppliers, their partners, and their customers. Okay?
Okay.
Clear? Now, when you also look at other things, what are the other kind of responsibilities a business has? Sometimes you will see businesses have social responsibility. That means, what is social responsibility? That means they need to, what do you think is social responsibility?
Social.
So when you look at
not in company.
So when you look at social responsibility means, social word means that you have some relation to society. You need to be able to give back something to the society, isn't it? Because you are a part of a society. So companies today, as I gave you an example yesterday, was when you buy certain goods from Unilever or some big companies like Samsung, Nestle, Procter & Gamble, what they do is they donate some part of their profits which they make from the product to charities. And the reason why they do it is because they are working with community and local, basically partners in local community, to do and give something back to the community in which they, source the products from farmers, from land, different types of products and suppliers. So sometimes you will see companies have social responsibility. That means they have to be seen to be fair and honest. They have to be seen that they are doing some greater good to the society. They are producing goods and services which are not harmful to the environment. Like if you take an example of Apple and Samsung have done away with the use of certain elements in the mobile phones like arsenic, cadmium, because these are very poisonous to the water table. So if they use these chemicals in making the mobile phone screens, then what happens is if they are not recycled properly, then this chemical can lead to toxic effects. That means it can lead to poisoning. And if it goes into the water table, then it can lead to mass destruction or loss of life. So these companies have taken it as a corporate social responsibility to not to use harmful chemicals in making their products like mobile phones. So that is what is called a social responsibility. They say that we need to have some responsibility towards our society to ensure that the products that we sell, like mobile phones, have to be safe, and when they are recycled, when they are old, when they are to be done away with, recycled, that should not lead to any harm to the environment. Is that okay?
Okay.
Now, there are different types of responsibilities. So one of the responsibilities that we talked about was social responsibility, which is they have some sort of a responsibility towards what is called, towards the, environment. Towards the society. The second type of responsibility that we look at is something called corporate social CSR responsibility. Now, corporate social responsibility, what is corporate social responsibility? In community issues, so corporate social responsibility is that as a big company, what you're trying to do is you're trying to have, what is called, certain things, you're trying to do certain things in the business which are going to be in general useful, and not cause any difficulty to, the environment. So here, when I look at corporate social responsibility could have things like some companies which are manufacturing companies. When you look at, if they are still manufacturing within the city, they have done insulation in the factory so that they produce less noise and cause less noise pollution in the city. Some companies which are operating in the city or cannot relocate, cannot move outside the city, they try and reduce the pollution by recycling the water or recycling the air before they release it into the environment. So here, when you look at corporate social responsibility, these are responsibilities which the company does in order to show that they are conscious of using natural resources, and they do not want to pollute or let's say use less of these resources so that they are available for future generations. Now, one of the other types of responsibilities we see is environmental responsibility, right? So when we use the word recycling, when we use waste management, when we say landfill, what happens is a lot of companies, a lot of businesses, they use a lot of natural resources like water, for example, electricity, for example. Now, this leads to what is called, because the factories use electricity. Electricity is produced by, by nuclear energy or by wind energy or by dam, water energy, or, as we say. So in this case, what the companies try and do is, in order to help preserve the environment, sometimes you will see the companies install solar panels. They look at efficient lighting in the office. They look at reducing usage of electricity when they have posters in the office saying, when you leave the office, please make sure lights are switched off, your PCs are switched off, because they want to save electricity. So here, the company is doing their bit to reduce what is called carbon emissions, and these carbon emissions can be, a way of reducing or showing environmental responsibility. Correct? Like nowadays, have you heard about something when we look at environmental issues? The use of plastics or use of plastic bags. In most, developed countries like UK, Europe, America, the use of plastic, for shopping is currently being discouraged. What the companies are doing is they charge you 5 pence or 10 pence per bag if you want to use plastic bag for shopping. So they are issuing, most of the big retailers like Tesco, Asda, Carrefour, Sainsbury, they are, what they are doing is they are issuing something called a recyclable bag. So you can bring the bag again and again for shopping and not use plastic. So what they are doing is they are conscious of something called environmental issues, right? Yeah, environmental issues, which is basically reducing the use of plastic, and that plastic leading to, pollution in the oceans. Ocean. So what we understand now is the second point, how do we assess responsibilities of business operating in global environment? We are looking at a lot of businesses, adhering to, some sort of responsibility for usage of, natural resources, looking at recycling, looking at environmental issues, looking at, issues which are related in general to corporate social responsibility. And these issues, they have to address, because in some countries, they have become law. That means, if you look at one example, when you look at car companies, in most countries, when you look at car companies, what has happened is that car emissions, which are leading to CO2 emissions, are leading to what is called global
warming. Global warming.
What is it called? Global
warming. Global warming.
Very good. So when you look at global warming, what car companies, what the government and the government is doing is they have introduced what is called carbon emission rules. So today most car manufacturers have to have catalytic, catalytic, what is catalytic converters? Catalytic converters in the cars. What does catalytic converter do? Catalytic converter, converts the carbon monoxide. Carbon monoxide is very poisonous. Okay?
Poisonous.
It is very poisonous. So it converts the carbon monoxide to what is called carbon dioxide.
Dioxide,
That's CO2. So dioxide, because that is not poisonous to human beings. So no car manufacturer in the world can actually sell a car, whether it's a petrol car or a diesel car, without having a catalytic converter, because catalytic converters convert carbon monoxide to carbon dioxide. Now the other thing that you will see, dioxide. So the other thing that you see is that a lot of countries have introduced what is called emission rules, and these rules are today, using what is called the Euro. In Europe, it is called Euro 5. That means you have to have certain efficiencies in the car which allow the car, when you are driving, to only reduce pollution, reduce air pollution. So they need to look at complying with something called Euro 5 norms. That means they have to have reduction in noise, reduction in pollution. Every car has to pass a certain test, and then and only then it gets what is called Euro 5 certificate. That means it is producing very little carbon emissions or pollution when it is running in the environment. Now, a lot of countries are focused on what is called using or introducing electric cars. Why they are introducing electric cars or asking customers to buy electric cars? Because
they don't make fume.
Correct. So it will reduce emissions or reduce, carbon emissions, or reduce global warming in general.
Yeah.
Now let's look at the third part. What we need to understand in the third part is we need to understand what are the strategies which a business employs when they are working globally. So when you look at Samsung as a company, when they work in different countries like the US, Europe, Asia, different continents, when they work in different places, they come up with different sales and marketing strategy, because customers' requirement in all the continents, all the places, countries, cities is very different, isn't it? So they might have to sell a product in Philippines, they might have to sell a product in Japan, China, India, Australia in a different way than sell it in the US or European country, because the law and legislation for products to be sold in Europe is different. One example is sometimes when you buy a mobile phone, in Asia, what is the electricity that you get? Is it 220 volt or 110 volts?
220 to 220.
But when you look at the US, for example, and you look at some of the European countries, there the electricity is 110 volts. So Samsung, when they produce phones, when they sell the phones with the charger, they have to make sure that the phone and the charger is, appropriate to the country in which it is sold. They cannot sell a 220 volt charger to a country which is using 110 volts in terms of electricity, because that product will blow. It will become faulty. So what they have to do is they have to look at something called localization. Correct?
Localization, yeah.
Why they do localization? Because they have to make the product suitable for use in that country. Correct? So when we look at businesses, when they operate in global, when I say global operations, they have different countries in which they sell products and services. They have to make sure that they are able to localize their products and make sure that these products which they are selling, they comply with the local legislation and requirements set by the government in that country. Okay?
Okay.
So when we look at globalization has many advantages because it allows businesses to increase sale. It allows them to sell their products in different countries to different customers, increase profit, but also globalization requires them to adapt their products to the needs of the customers in the country in which they are being sold. Okay?
Okay.
Now, if you look at a concept called recession or boom, something which is economy is growing very fast, and in some countries the economy is not growing, but it is slowing down. So when you look at global operations, Samsung sells its product in so many countries, but China, India are growing at 6-7%. There the rate of growth is quite high as compared to other countries. You look at Indonesia, which is growing at 7%. You look at other countries like Australia, UK, which are growing at 2%. You look at US, which is growing at 8%. But when you look at companies, when they sell their products in different markets or in different countries, the economic boom can actually help them increase profits, can increase sales, or in some countries wherein the sales are slowing down, that means, or the economy is slowing down, that would mean that their sales are also going to slow. Is it going to slow down or is it going to increase? Huh?
Sorry, Uma, please.
Yeah, so it will become slow. So when you look at recession and when you look at, options wherein the economy is growing and the economy is contracting, we call it recession and we call it boom. So this also affects your strategies. That means Samsung will have to look at if there is a lot of inventory in a particular country wherein the sales are slowing, they will have to look at strategies to sell that inventory of goods. So that could mean that they will move out some of the products from that market to another market where it is where the economy is growing. They could look at offering discounts to liquidate or sell that inventory. Samsung might decide to take a bit of loss, but still sell the inventory because moving it to another country will cost in terms of transport, logistics, maybe changes to the product, and that would be, overall not possible. So sometimes when you look at strategies which companies have to employ to deal with, global operations, sometimes they have to look at, certain actions which are going to help them sell, liquidate, or, attract more customers by taking up different business strategies. And these business strategies could be that if the product sales are falling in a country, they could look at discounting so that the discounts will attract more customers, but this way they will make less profit, but at the end of the day, the company will liquidate or, sell out their inventory. Because that inventory might not be like mobile phones. If America market slows down, American products, because they have English as a language, the voltage on the products might be 110 volts, could not be sold in China because the Chinese product would require Chinese language, localization of packing, English will not be required, but Chinese will be required, and maybe differences in other things will have to be done. So sometimes it is difficult to move the product from US to China to sell it So what they will do is, if the sales are slowing down because of recession, they will give additional discounts or some sort of incentives to sell the inventory and get rid of the stock rather than make a loss, make less profit. Okay.
Okay.
So what we want to see is that when you look at globalization and we look at strategies of globalization, here the companies have to look at various things from a point of view of selling in those markets. They could look at exchange rate. If the dollar goes up and the dollar goes down, exchange rate, it could affect import and export. It could affect the cost of raw material. In some cases, when you look at policies, when they change, when you look at the, governments also change, they are also introducing new policies. Sometimes you'll see, one government is very pro-business. That means they will introduce good policies so that businesses can grow. But sometimes the other government which comes to power, opposition when it comes to power, they will say, no, we need to have nationalization, we need to have public sector business more rather than private business. So they introduce policies which could affect the business the other way. That means they are going to be more conservative. So businesses have to look at, all these situations in terms of strategies to increase their sales and profit. And that's why they look at selling globally in different markets. Is that okay? Yeah. So what I've done in this slide is I have taken an example of a business called Tesco. Tesco is a big retailer in the UK and they have operations in 14 countries. So when you look at Tesco, it's a very big retailer. They sell products in 14 different countries. They have over 3,400 stores. And what I've looked at is that when Tesco sells products in other countries like Turkey, Germany, France, UK, Spain, they have different strategies that they have to adopt to sell their products to make business or make profit. And that is what is the, at the expense of something called global operations, because it's a global business. They are basically selling in so many countries. So the business has to look at in deploying various strategies to operate in a global environment. Okay?
Okay.
Yeah. So what we've covered is 1.3, which talks about how do businesses employ different strategies to sell their products in global markets. Okay. So with this, we will end today's session. And what I'm going to do is I'm going to send this copy of the presentation. This presentation is also available on, Moodle. Have you logged into Moodle?
Sorry, Moodle?
Have you logged into the Moodle?
Yeah, not yet. So tonight I will enter the site.
Okay. So when you get into Moodle, what you will see is when you get into this particular course, the level 5 diploma, you will see that in the level 5 diploma, this particular presentation is already there. So when I go into level 5 diploma, when I look at businesses in global context, you click on learning outcome 1, because what we are covering right now is learning outcome 1. Businesses operate learning outcome 1. So you see this presentation is already there.
Okay.
Is that okay?
Okay.
So you can go through this presentation, and what I'm going to do is also send you a handout, and that handout will help you study a bit more into this particular presentation. Okay?
Okay.
Any questions on this?
Recessing is bad. Economics is bad.
Recession is bad. Yes. Economics is bad. Yes, that's correct.
Okay.
Okay. So economics is recession is bad for the business, bad for the economy. Now, what I'm going to do is I'm going to send you this handout, which is going to be the handout on globalization, which you can read in a bit more detail. It talks about globalization strategies, international markets, and it has some examples that you can read. Now, this is about a 10-12 page handout, and this handout covers some of the things that we have discussed today.
Yeah.
Okay?
Okay.
Okay, good stuff. So if you have any questions, then what you can do is you can drop me an email at when you have any questions, you can drop me an email at Raman, at ukversity.co.uk. If you have any questions or, or doubts, or if you need any reading material, any study material, then you can send me an email on this.
Okay.
Okay?
Okay.
Good stuff. So I will catch up with you next week, and we will discuss learning outcome 2 for this unit, and then Tuesday, we'll have a session, and we will discuss the second learning outcome of this particular unit.
Okay.
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 Okay. Thank you, Minjay. Any other